Hello, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So today's webinar for the day for this week, I want us to look at just a simple strategy which is very useful for trading indices. I want us to start off with the SP500 index, and there is just one thing. There is just one thing which I want to look at strictly. So we'll start with the SP500, and I want to say something before we start. If you look at this index very well from the start, it has been in a very good uptrend. So the prices has been moving very much bullish. So we've seen price move from this point to this point here, then there's this correction, then the price moved from this point up to this point here, then we had a correction, then the price moved from this point to this point, and then we had a correction here. Then the price moved from this point and headed upwards. Headed upwards. We can see that the price moved upwards, at least up to this point here. So technically, if you count the retracement that we had, this was around, let me make this visible. This retracement here, this was like sorry, let me see. So we take where it started up to this point. This is like 38% pullback, and then the next one, which started here, went upwards. It was around 50% retracement. Then the next one, so this one will give these lines different appearance so that we're able to see exactly where they are. So this one, the price pulled back up to around, this is 100% pullback. We made 100% pullback. Then what we are seeing currently, we have price, it has gone up to around 38.2% fib level. So from experience, from what you can see here, you can see that the price, anytime the price moves up intensely, it pulls back like 38.2% fib level. If it moves up, it pulls back again like 50.0% fib level. If it moves up, then it pulls back. This was 100%, and currently right now this is 38.2% fib level. So what we are looking at here is that we may see the price extend downwards. We may see the price continue to move downwards. At least up to this point, this is 50.0% fib level, which will give us the best place to look for a buy from. So now that is not the strategy. That is just an analysis, an overview of what has been happening and what we expect to be happening briefly on the monthly chart. So here now, we want to look at the strategy. How will you be able to buy it when the price is somewhere here without any delays or without getting late or early entry? We'll do that on the 1 hour chart. Then we minimize this. So for this one, I do use some indicators. I use the oscillators. We have the first one. We look at the stochastic. So with the stochastic, I just use the default settings. There is nothing special, just the default settings, the ones which come by default with this chart. So look at this. Look at what's happening here. If you check 1 hour, there is nothing much of late, but if you check 30 minutes, I see. Okay. Just a second. Okay, look at what is happening here. Look at what is happening here. Just a second. That's still not a good one. That's not a good one. This is not a good one. And this is not a good one still. That's not a good one. Okay, look at this here. If you draw a vertical line touching this line, and then you draw another vertical line touching that line, you can see that there is this move here. There is this move while the price was going down here. We actually had the stochastic moving upwards. So you may call this divergence, convergence, or opposite. But what happens is, at this point here, the price appears to be doing something opposite what the indicator is doing. So if we are expecting a buy, if you are expecting a buy normally, maybe you are expecting a buy around this line here. You may not know exactly what this line, the level is, but if you're expecting a buy around this area, then you see a scenario like this where the indicator is showing something opposite what the EA is, what the price is doing. Then this is usually the correct place to look for a buy from, especially for indices. So the idea is to first of all identify a key level on a high time frame, get a very good level on the highest time frame possible, and then look for a key level. Like we assume that this is a very good level on a higher time frame. So when the price gets to somewhere around this area here, this is the best place to look for a buy from. This is the ideal place you want to look for a buy from. So let's see. We have another, let's get another example. Okay, there's another one here. You can see the stochastic is here, the price is there. So the price went down to that point, and then the stochastic remained in the same point. So this may not be a very good one, but it still could give you a good sign for a sell. So if you are waiting for a sell around this area, and then you find a divergence or convergence or opposite means the price is doing exactly opposite what the chart is doing, what the indicator is doing, then that is always the correct place to look for a sell from. So you may add other things like moving averages. You place 200 period moving average. If you see divergence for a sell on a lesser time frame, or maybe on 30 minutes, and on the 1 hour we have a very good downtrend, then that is usually the correct place to look for a sell from. So that's that. Let's get the next point. Let's look for the next example. Okay, look at what's happening here. We have price giving us this high. The indicator is here, and the price is here. The price is here. Then the next time the price is there, the indicator is up there. The price is not as high as the previous one. Then when the indicator gets even lower, the price is somehow getting higher. And also here, the indicator, if look at the high of this, look at the high of this one, the high of this one, and the high of this one. It looks like as the indicator is getting lower, the price is getting higher. So what that simply means is that there are extremely high chances that we are now reversing to the lower side. There is very high chance that now we are reversing from this point, heading straight to the lower side. So if you see an incident like this, while on the higher time frame, maybe on the daily chart or on the weekly chart, we have a resistance here for a sell, just know that a sell is approaching. Just know that a very good sell is approaching, and you can see that here. You can see this is upwards while the other one is bearish. So you can see that. You can see that we have that, and then we have this one here. So let's get another example. Let's see another example. The other example could be this one here, where you find that the price is here and the stochastic is here. Then at some point, while the price has gone back to the same level where it was, this was the level where the price was previously, you can see that the price has gone back to that level, while the stochastic is several points below the same place. So this is a sign that the price is likely going to change to the lower side. This is always the best times to look for a sell. These are usually the correct place to look for a sell from. When there is an opposite, where the price is showing you something and the indicator is showing you something exactly opposite. Does that make sense? So that should bring us, that was briefly what I wanted us to look at. That's what I wanted us to see. That if you want to be successful trading indices, look for opposite scenarios. Look for cases where the price is showing you something opposite and the indicator is showing you something also exactly opposite. That's always the correct time to look for a trade. So thank you very much. We'll meet again next week at the same time. Thank you and see you.